Some traders are seeing political tensions over in Kenya easing back a bit, that as the ICC trials get underway. But any trial really could potentially tilt the balance of power over on that end, where at least two of the suspects are expected to be vying for that position of presidency. How are you reading the political background at this moment and the impact it's having on markets right now?
Well, I think the market has already factored in the ICC trials. I think there's been quite a heightened level of political bickering, and so I don't think that at the moment we are expecting any major shifts on the market based on that. And I think that even if there were trials, there would be some sort of time lag, which would probably allow them, the people who are being accused, to have come back and maybe set up whatever strategies that they need to set up for the elections. So I think it's what they do after the mentions that matters.
Well, we were talking about expectations for the markets to rise further this week as investors seek inflation-beating returns. But we also have investors positioning themselves ahead of banks' first quarter results. What are your expectations there? Because many expect banks to do marginally better than last year.
Well, I think for one, we are seeing foreign investors begin to troop back after having gone to bargain hunt, I think, on the Egyptian markets. I believe that after that market opened, we did see a huge slump in foreign investor activity on our market, and that usually leads to our indices going down. So I think that return to our market is pushing our market up, and I believe that going into the rest of the week, we should expect to continue seeing the NIC 20 and the Nairobi All Share Index continue to go up. In terms of banks' results, I think we do expect that the economy is still in acceleration mode. We know that the drought and inflation are probably the main factors that are causing worry, but I believe now that we've seen at least some rains, there's a bit of relaxation on that line, and I believe that other companies, apart from the financials, are also going to start to show returns for the investments they made last year.
Let's for a moment take a look at a couple of the players within that banking sector, though. KCB is one of the standout players. I was reading a report yesterday pegging fair value at 29 shillings 50, and that representing a 20.5% upside from the current share price. This is a stock that many have said in the past is looking cheapest amongst the large cap banks with a forward PE of 8.2 times. What's your view on KCB right now?
KCB and cooperative and equity remain my favorite picks in the financial sector. That's because anytime our economy is showing signs of growth, they are the ones that gain the most. KCB raised some capital last year, and I believe that they are in a position to see accelerated growth. Secondly, they've entered the mortgage market, which also gives them another income line, and so that will also play well for them. I believe that being the bank that has the biggest branch network, they're also in a position to reach out to most of the areas in Kenya, and therefore they are in a very good position. And I do agree that it is an undervalued stock.
What are you making of the company's capital raising initiatives exactly? Because we know that the company plans to raise Tier 2 capital in the second half of this year as well, following that capital raising initiative that you touched on that we saw last year.
Well, investors usually reward investment spend based on what the investment is about. And so whenever a company comes in to raise capital, investors are going to look at why it is raising that capital. And if what it is raising the capital for is viable, then naturally we are going to start valuing it on growth opportunities. And so therefore, I think that in a time of growth, then companies that are raising capital are companies to watch. They're companies that we need to find out why they're raising it, and also to see how viable the reasons are. on that note, I think that we have a very strong dividend culture in Kenya. People forget that, companies need to use their retained earnings sometimes as an avenue for growth. But because of the love for dividends, they tend to have to pay dividends out. And that also means that they end up raising capital sometimes when they don't need as much, because they also have quite a lot of retained earnings.
Well, KCB has one of the highest forward dividend yields of 6.4% against a sector average of 4.9%. Are you expecting the company to continue with that aggressive divvy policy moving forward?
Well, they would have to, because at the end of the day, they have a very big retail investor component, and retail investors they have that notion that dividend payers are actually the best companies. I think it's up to us market players to sort of educate the public on the fact that when a company doesn't pay dividends and they retain the earnings for a good investment plan, then the company will be valued on the growth opportunities, and so they can actually pay they pay themselves the dividends by selling at a higher price.
Samuel, let's quickly look at Equity Bank. It's broken into the corporate debt market, striking a record 5 billion shilling loan deal with City Hall, and that really marking, as I say, its entry into the corporate lending arena. Do you see the bank replicating its personal loans market revolution in the corporate debt market, where it currently has no presence?
Come again, please.
Just looking at Equity Bank, we've seen it strike a deal with City Hall, and that marking now its venture into the corporate debt market. What are you making of that move, and do you see it replicating its business model that it's used in the personal loan market in this space as well?
Well, I think one thing about Equity is that they're very innovative, and they're very strong on being able to find new avenues where they can actually make good returns. And so I believe that their model has been very consistent all the way, and I believe that they are definitely seeing a new avenue for growth. They do need it. I think at the end of the day, banks are beginning to be one-stop shops. They're beginning to look for new lines of income, and if you're not in any line of business as a bank in Kenya today, then you're seriously lowering your chances of making mega profits.